Hi, I'm Peter Rose, founder of Longwood Currency Trading. Don't trade Forex unless you can do this. That's the title of the discussion I'd like to have with you today. It's a beautiful day. We're coming on late November of 2023, and it's winter. It's 28 degrees out, 30 degrees out, cold. I just got in from hauling in some wood. I had a lot of people ask, well, why are you doing a lot of your videos in your kitchen? Well, it's beautiful. Let's just take a pan around outside. I hope the sunlight isn't too bright that you can't see outside. Well, I mean, you can't see outside. Okay, so there's the view inside of the kitchen. And sorry for spinning you around there. Don't get too dizzy and throw up on the monitor. That's why I'm in the kitchen. I like to have my coffee out here. I fix my coffee and sip it out here and do some thinking about whatever project I'm working on. And that was one of the reasons that I came up with this topic today. I was out here getting my coffee after bringing the wood in. And I thought, you know, I've done a couple of videos on visualization before, and you probably want to go back through my catalog and take a look at those, because if you can't visualize, then you probably shouldn't be trading currencies. And the reason for that is because the currency market, the Forex market, is different than all the other markets. You trade it the same, but when you do things and the view that you have to have of when you do those things is different than in the other markets. The currency market, therefore, is non-intuitive. If you're used to trading stocks or even looking at stocks as an investor or real estate or something, like I did 40 years of real estate, you can look at things and there's an intuitive thing. Oh, well, there's water coming through the ceiling and, geez, I guess there's a leak in the roof, or maybe the toilet overflowed or the bathtub overflowed in the bathroom upstairs. There's an intuitive thing there. Sometimes they're more blatant intuitive things. You see this octagonal thing, it's red, it says stop on it, right? And so intuitively you know that there's some kind of a dangerous, potentially dangerous intersection that's required that stop sign to be there. And you look at stocks and you say, oh, because this company is doing blah, 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 and the CEO just said this, the 10K report had this information in it, and blah, 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 then intuitively I would think that X is going to happen. And so you can do that. But you can't do that in currencies. And there are reasons for that, and it has to do with the structure of the market. Who am I to talk about the structure of the market or whatever? Well, you have to go to my biography on either my website, longwoodcurrencytrading.com, or on the video site here, and see what my background is to make a statement like that. Visualization is the most important component in your ability to determine non-intuitive approaches to trading currencies, because you have to be able to visualize what's going on under the sheets. A plumber has to visualize. He's got to be able to see all the stuff that's going on in his head, so he knows how to hook the things up and where the air pressures are and all that sort of stuff. Plumbing isn't just putting a toilet in. You have a lot of really highly technical things that have to be done. An architect is a person who visualizes. Anybody who's in the arts has to be able to visualize what's going on. An auto mechanic has to be able to visualize things. And if you're going to trade anything, cars or real estate, currencies, old tires, don't make any difference, you need to be able to visualize it. But it's particularly true in currencies, because if you can't visualize, then you're never going to see the inconsistencies in that intuitive view that we tend to have as human beings. We use our intuition. Oh, I hear something, and that means there might be danger, and I need to listen to that. I mean, our DNA is geared up for that kind of an intuitive lifestyle in doing it. Oh, geez, it's raining really hard, but it looks like it'll be okay by the time I need to go out to the store. That type of thing. When you are crafting not only your trading plan, But the framework of that trading plan and the rules that constitute the underlying structure of that trading plan, those rules have to take into account the conditions of the rules in order to do XYZ, have to incorporate that non-intuitive view of the market. And the only measure we have of that is the actual order flow right now. And so that's why I tend to be more of a day trader and feel safer doing that and make more money doing that, because I can be more in tune. I understand the non-intuitive nature of the market. I understand kind of sort of order flow, not from a fundamental standpoint, but the different ways of viewing that order flow. And that's not on volume or anything like that, or what the level 2 is saying. But I have that ability to visualize. And I think that in looking at the financial markets since the early or mid-1970s, I guess, I'm old, I'm 74 years old, and the currency markets, I've been looking at them since 2007 and actively trading them since about 2012, one way or another, and doing a lot of computer simulation against those markets, those price actions, and using real-time data too, as well as simulations and projecting movements. And the projections don't match the current movement, so if the simulation doesn't take into account that non-intuitive thing that's out there that has to do with order flow, then they don't match up very well. And so that's been something I discovered very early in my modeling of different approaches to trading, to be sure that I understand that it's not my intuitive programming self that does that. I was a software engineer for 33 years, so you need to be very visual in software engineering, and it's very intuitive. What's the user going to do when he pushes this button? What does he expect to have happen? And what could he do to screw that up? What if he pushed this button first when he was supposed to do this one first? What does that do to the logic that I have to build for that application to account for that? You kind of get an intuitive sense for what users are going to do and how things are going to be used. And so when I'm looking at, or when I looked at crafting my rules, because I don't build any more rules, when if you've read the bio on my website, if you've watched my videos, then you know I got into deep shit when I first started trading a large account, and I lost that money very quickly. And I looked at the market as a whole. Why did I fail with this? And it was because I was listening to the education that was being propagated out there. Now, sure, this is back in 2018 or 17, 16, 15, in there, where I was really starting to study it as a trading thing, whereas from 2007 until about 2012, I was doing it more as an academic exercise, just because I enjoyed it, because I was still involved in real estate and I was still working and stuff. I didn't need the money, but I enjoyed solving puzzles, and currency market is a really puzzling puzzle, very complex. But I stepped back from that market after that loss. I said, what's wrong here? I determined that the education was wrong. It isn't like the education I got in real estate. When I'd ask somebody, when I was going to buy a building, I'd say, you see the building has blah, 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 blah. What do you think about that? And, well, I've run into that before, and you should be able to and do that. The advice that I got was right. I implemented it, and it worked. But it doesn't work that way in currencies, because either people don't know what they're doing, or they know what they're doing, but they don't know how to teach it, and so they talk about Fibonacci's and Bollinger Bands and all the rest of the crap. Once I determined that the educational background was incorrect, I had to rely on my own educational background. Software engineer, degree in physics, almost a minor in math, been involved in the martial arts for over 55 years. So I looked at that and I said, wait a minute. This is a problem just like any other problem that I'm faced with in software engineering. how do we solve a problem in software engineering? And there's a thing called the software development life cycle. It's how you approach looking at a problem and wireframing things up and doing analysis and iterating back. There's a process that you go through in solving a problem. And I just took that framework, and I talk extensively in my videos about what I call the life cycle of a currency position, which is patterned after the software development life cycle. And there's 3 elements of the life cycle of a currency position. That's your entry analysis, position management, and exit methodology. And each one of those are separate problems within the context of the full problem domain of trading currencies. And so there's a rule for each one of those phases, one rule. And that's what I was able to look at, and I was able to do it very quickly because of my background. It might take you a little bit longer if you don't have a software engineering background or a solid approach to problem solutions. Took me 15 minutes. I had it all mapped out. It was on a little piece of paper. I wrote the 3 rules down. Obviously, as I work with them, I've improved them and made the conditions in software engineering what we call extensible, meaning that based on the conditions that I'm seeing, those rules are extensible into those conditions. The rule doesn't change, it's when you implement the rule. That's the beauty of what I was able to do, because I don't like complex things. I'm an expert at breaking complex things down into simple things and creating a simple solution for the simple thing, and then hooking the simple things together to form a cohesive solution to whatever problem I'm working on. And those 3 rules are very simple. They have maybe 3 conditions each, so maybe 9 different things that you're doing, but you don't have a permutation of those 9 things. You know, if you have if you have 2 objects, A and B, you can have 4 permutations. You can have A, you can have B, AB, and BA. So from 2 things, you get 4. If you had 5 things, you have 325 different permutations. The fact that I have 9 conditions to solve the 3 rules doesn't mean that I have some complex algorithm of permutations of things. No, if I'm in the entry analysis, I have 3 conditions that need to be met, and they're in order, so there's no permutation of them. There's no scrambling them up. Like if I was looking at most of what most of you are doing is you got trend lines, Bollinger Bands, RSI, and blah, 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 blah. So maybe you got 3 things. There's 21 permutations of those. Do I want to put more weight on the Bollinger Band, or do I want to put more weight on the RSI? Do I want to put more weight on the RSI than the moving average crossover thingy that I'm looking at, or the engulfing candle pattern, or the London Open, whatever the hell it is that you're doing? You're changing those things around in order of their importance, and you have to know how to trade in order to say, oh, well, I think this characteristic is more important today. This RSI isn't going to make any difference to what's going on. It doesn't make any sense because of XYZ, so I need to rely more on XYZ, on some other, what we call an indicator, right? I don't use indicators. I use moving averages, and that's it, and I don't use them for the reasons of doing a golden cross or some stupid shit like that. So the rules that I developed, although they have 3 conditions, it's like this has to be first, and then if that's true, then I go on to the next one. If the first condition isn't true, then the rule is over. That's part of software engineering when you're designing your rules and you're working your programming. If this doesn't work, don't bother to check anything else. It's done. Throw an exception, an error, or take the user back and say, you didn't indicate a social security number, you indicated your phone number, dumbass. Right? So the conditions are chronological, and that's what makes it really simple. The conditions also have to be in the context of whether you're in a chop or a trend or a range bound or NFP or whatever's going on, the rule should function within any type of condition. How many times have you heard somebody say, and it's particularly true in the stock market, other people who get it wrong in the currency markets are gone right away, so you don't hear from them. But they'll say, oh, the market changed and my rules stopped working. Oh, really? Huh. How did you know that the market changed and your rule wasn't working? It was after the fact. After you banged away at it for 4 or 5 times and you lost significantly because you're wrapped up in that algorithm for that rule that you're working on, and you didn't know that the market changed. I mean, a breakout. How do you know that the breakout succeeded? Are you going to know it on that candle? You can take a poke at it if you're doing stocks or futures, but in currencies, you know that a breakout is followed by a retracement under the breakout, and then it's either going to fail or it's going to continue. There's a reason for that. And actually, it has to happen where it doesn't have to happen in stocks or futures. So your rules not only have to be specific to the market that you're dealing with and be extensible enough so that you can take them to another market without screwing things up, but if you're only going to trade currencies, you're still going to have to make those rules so that they're extensible. And in order to be able to do that, you need to be able to visualize what's going on in the market. If you can do that, then I think you'll be able to construct fairly good rules, and you can rely on your own intuitive nature then to say this is not an intuitive approach, it's non-intuitive, but I get it. And once you get it, then it's intuitive. But not before. That's kind of like catch-22 type thing. But if you're trading, you know what I'm talking about. If you haven't really done any real trading in a real account with more than a couple of minis, then you don't get that. You don't understand that. But I can't help you if you're a beginner. Because if you're a beginner, you're susceptible to hearing people talk about RSI or the Golden Cross or London Open or all this stuff. And you go, yeah, I'm going to try that, I'm going to try that. And you try 4 or 5 times, it doesn't work. And it ain't going to work anyway for you because you don't have the experience. You don't know how to go about the problem solution. But the key thing that you should know is that if you do not have the ability to visualize, if you can't do artwork or you can't think in terms of writing a poem or solving a plumbing solution or whatever it is that requires visualization, and you know what that would be, if you can't do that, then you better not be trading currencies, because you will absolutely 100% dead balls on accurate, Marissa Tomei and my cousin Vinny, lose your money. Not only that, but you'll lose your account. Because you won't believe it, because it won't be intuitive, and you'll be thinking intuitively. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.